All right. Welcome back, everybody. We have a special edition. We are back with Bubba, Todd, Horwitz here. And we had such a great time a couple of weeks ago. We had an awesome response. I figured we'd bring him back and kind of shoot the breeze. I got Rob here as usual. And Rob is here to kind of kick up the dust a little bit, So anyways, we don't have any direction today. We're just going to shoot the shit, talk about the news, talk about this face ripper of a market. It's still going up on a Friday, which is crazy. And then Bubba actually knows a lot about oil and kind of what's going on over there. So Bubba, what's been new, buddy? Tell me what's up.
Hey, listen, it's been a wild market, right? I mean, no volume, high prices.
No volume.
I look at this market itself as a retail rally. It doesn't matter for us because we're reading the charts, we're reading the tape, we're using emergent edge, whatever, right? So whatever happens. But I look at the market from my perspective and I go, where's all the volume? This is like the big houses are letting the retailers go crazy here and push these markets to record highs. I mean, the S&P's up 12% in the last 2 weeks. So all of a sudden, I think they're waiting on the sidelines to give them a good crack in the head. But at the end of the day, I can have an opinion. You have an opinion. A couple of weeks ago, you were negative of the market, but it doesn't really matter because you and I aren't going to trade from our opinion. We're going to look at the prices. We're going to look at the action, and we're going to say this market's either going up or it's going down. There's nothing to do, right? I mean, do you agree with that? Is that how you perspective market? I mean, I read your shit every night. You got your levels, your trade plan every morning.
Yeah. You got to pivot. You know what I mean? New information. You got to pivot. Like our opinions don't pay the bills.
No. Exactly.
No. They don't pay the bills, and I think Listen, I think people have to realize, especially those that were with you and people that are thinking about being with you and me, is that we don't care about the news. What do I care? Listen, I watch VSiN Sports and Information Network all day long. Okay, because not only am I a trader, but I'm a degenerate bettor as well. Right.
Okay.
So, listen, if there ain't a day that goes by that I don't have a bet somewhere, whether I'm playing poker, whether I'm betting on golf, whether I'm betting on baseball, football, it don't matter. Right.
The joys of living in Vegas.
What's that?
The joys of living in Vegas.
I love Vegas, baby. But someday they'll really get sports betting here, right? They don't have the same advantage. I've got to have my son make bets for me back in Chicago because, of course, they don't have the same. They don't give the same capabilities here in Las Vegas. But I think that you got to approach, whether you play poker, whether you bet on games, whatever you're doing, you have to have an approach that has to be driven by a reason for you to get involved and make that bet or make that trade. And I think that's kind of what you're teaching, okay, is you have a reason, you put together this plan. And I believe this morning you said you expected an 87-point range in the S&P. Is that right?
Yeah.
Mm-hmm. And right now with the overnight trading, we're at about 100 and something. So would this indicate to you that maybe the market's a little overextended here, way past your limit? Or
it feels a little cooked to me. I mean, we just use the data like you, Bubba. We know, listen, over the past 10 days, it's gone about 100 points. And now we're way over that. It's like, okay, guys, how much farther can this really go today? You know what I mean? So,
and I'm a real degenerate. I trade NQ, and it's up 2,000 points in a week. NQ is insane.
Yeah, he's a tweaker. He's a tweaker, by the way, Todd. He trades NQ. So
listen, I go back to the days before there were minis. I go back to the days when the NASDAQ was $100 a tick. Okay.
That's crazy. That's full.
Okay, that was, listen, when I first started, I started in the CBOE, but I was also traded at the Merck. And the S&P 500 contract was 500, not 50. Okay?
Right.
Then they cut it into half to 250, and then they brought out the minis.
We're trading the micros technically from the $50 a point. It's kind of micros.
Yeah. So now we're at the micros, but again, I think you can trade anything. Okay. Rob, you're the quant, you're the genius. You got all this stuff. Does it matter to you what you trade? I mean, your stuff will work on any market.
Yeah, it'll work on anything, right?
This is something that I teach everybody. In my opinion, all charts are the same. All patterns repeat themselves. Yeah. And the shortest time frame has to resolve the longer time frame. It has to start. If we're going to sell off, it's got to start in the shorter time frame first.
1,000%. That's how we do it too. Yeah, exactly. It starts with the small and goes to the big. Right?
I heard you guys yesterday on the webinar. That was a great webinar.
Did you like it? It turned out really nice, right?
What's that?
It turned out really nice.
I thought it was great.
Yeah.
It made me want to jump out and get a margin edge, which I have already, so it's okay.
Believe it or not, so listen, check this out. And this kind of goes off target a little bit here. But I was telling Rob, I'm like, oh, we just hit our target, right? I had no intentions of getting long this morning at the highs, right? But our algo did. It got long. What was it, Rob? 40 points for the first target or something?
Yeah.
Crazy? Yeah. And it bought the highs. Literally, it bought, what did it buy? It was like 50. I don't have my charts up anymore, but it was like 46, I think, right?
Yeah. I think it was 46.
Yeah.
Now it's 86. So there you go.
Yeah.
Crazy. So taking trades I wouldn't take.
I just think
it got in at 46.50.
Yeah.
Now, Rob, you have a background in trading from before?
No, not from before, but I've been trading for a few years now.
10 is a little bit more than a few years.
Yeah. And to be candid, I really wanted to start out doing quantitative trading initially, but there weren't a lot of great tools out there. And the algorithms and things like that I was working on, they were, they would make money, but only, a certain percentage a year, like a Vanguard fund kind of thing, 7 to 12%. And I was like, well, I can't do this and make a living. That's good retirement, but not like active trader money. And so that's why I went the discretionary path and sort of did this on the side. And as we've had more volatility and we started to develop the tools that we needed to quantitatively trade, then that's when we were starting to unlock these algorithms to be able to sort of, basically we're trying to outtrade ourselves at this point. We're trying to, do more than enter in at different places, have totally different mechanisms and styles of how we're entering and exiting.
Right.
We can't do or wouldn't do in our normal sort of process.
Like today.
We've got these uncorrelated risk-adjusted returns that really sort of like stack up and really compound what the gains are. So yeah, I started out, I really want to do quantitative stuff, and then, it just wasn't there for me. And you have a really big, book, then 7-14% a year is great. But I mean, when you're really trying to, make degen status and really kind of like, outperform the market by quite a bit, that's,
well, that's where the daily stuff comes in, right? I mean, the difference is if you're looking out long term, 7 to 10% is great. I mean, the market average is 8.5% year over year.
Yeah.
But when you're trying to make real money, okay,
right.
I mean, you have to be able to perform, in the 20s, 30s, 40s. Some years are going to do worse, some years are going to be better. But you got to continue to roll that over and continue to bring that money in, because obviously to make a living,
exactly.
unless you're sitting with $10 million and 10% of 10.
Yeah, 10% is great. You're still doing fine. But like, if you're trying to really like
10% off of 150 grand is like you don't get to actually, your kids don't get shoes then.
Yeah.
You know what I mean?
10% on 150 grand, you're still
got to
like,
go to the food quarters to get some food,
you're still living below the poverty level. Like, I mean, it's like, like it's really grow.
Well, I mean, if you think about it seriously, depending on where you live, but in any major city, if you're not making $150,000 a year, you're living in poverty anyways.
It's true.
Yeah.
It's crazy that we've come to that, actually, because when I was growing up, 75,000, you were balling.
You're fine.
Like, that was a great income, right? And now it's like 100,000 is kind of like minimum. I don't want to say minimum wage, but it's
100,000. You can't live. I'll tell you this. I'm going to give you one quick stat. Okay, 1985, the average income was 25,000. The average house was 75,000.
Yeah. Okay,
today,
that's crazy.
The average income is 70,000. The average house is over 500.
Yeah, right.
Think of those numbers. 7 times versus 3
times. Close enough there,
yeah. So like my father in 1968 was building the house I grew up in, and he was making minimum wage, which was like $3.18 an hour, and built a 2,000 square foot house in a populated area of Portland, Oregon, and he could make it work. Like, there is no way you could do anything like that now. I can't imagine making minimum wage and trying to make a Home Depot run for anything.
I don't think you can afford to get a Home Depot.
So my grandfather and my grandmother, they obviously post-war, right? My grandfather was a naval pilot, and post-war, they started a jewelry store on their front porch with $500. That is now one of the biggest jewelry stores in Indiana, and obviously their town. And they literally started with $500. To think that you could do a jewelry store for $500. Now it's so mind blowing. Like, are you kidding me?
It would be jewelry in air quotes.
Yeah, right. It would be like
It
plastic.
may turn your neck green, but it's totally fine. It's real gold, really.
It's crazy. It's crazy.
So you guys had developed a great model, but I think the way you deliver your information is unbelievable as well. I mean, you give somebody every day levels to watch. Now, do they work every day? No, nothing works every single day,
right.
Except you and I go to work every day.
Yeah, that certainly works.
But
that works.
Listen, I don't make money every day, and I would never tell anybody that I do make money every day.
Yeah.
I'd like to make money every day. I knew guys that would make money that would grind out. I mean, if they had 2 losing days a year on the floor, it was a lot. Okay. But they were grinding out small amounts of money on a regular basis. And of course, I'm looking for, the longer hits. I'm looking for the 40-point hit you guys got this morning off Emergent, right?
Yeah.
Mm-hmm.
So, but again, the business, in my opinion, is a grind. Okay.
For sure.
You have to be willing to tough it out, because sometimes they don't go right your way.
Yeah.
But I also think that it's a game. Okay. To me,
Yeah.
This is a big game. This is no different
100%.
than poker, gin, backgammon, or bridge. Those are all mathematically designed games that the better player will win over time. Is he going to win every time? No. I can still tell you when I lost 6,500 on a guy having to roll double sixes 3 times in a row. Okay. Think about the odds on that.
Yeah, right.
It's the double sixes 3 times in a row. And for
We
those
just
who
knew
don't
that
know,
wasn't going to
it's
happen.
a 36 to 1 shot
basically.
times 3. 36 times 36 times 36. That was the odds of the probability of that event occurring. But the impossible does occur occasionally, doesn't it?
Right. For sure. Rob, what's the probabilities on that?
No, I was just thinking, like, the trader in you is like, well, it's either really low probability or the dice are rigged. Like, that's the.
Well, I mean, again, as a trader, this is one of the things I think this is one of the areas that a lot of options traders get trapped in.
Yeah.
Okay. I don't know if you guys have ever sold naked options.
Worst decision of my life, selling Amazon calls on the initial rally at 1,200. I just knew it couldn't go past 1,200.
Okay. So I know a lot of guys that blew out by selling naked options, because when you're on the floor, your margin requirements are a little different. You get a little bit better edge.
Right.
Okay. Yeah. And guys sold a lot of naked premium. Well, of course, things happen. And all of a sudden, those calls, I'll never forget this as long as I live. We just opened a new floor in Chicago. We were still in the old office building and the Board of Trade building. A guy was short the 155 calls in the OEX. Okay. It was so busy that when he left the floor at 3:00 Chicago time, now they trade till 3:15, but when he left the floor at Chicago time, the index was the OEX was at 153. He came back and he wiped his brow. I go, I survived. I said, don't be so sure yet. This tape is still running. They're way behind. By the time the index closed, it closed at 159. Okay.
And he was at what?
And it blew him out.
He was at 155?
He was short the 155 calls, and it blew him out at 159.
Terrible.
True story. I mean, again, this is why you don't sell naked premium. There's so many tools you can use today for the average trader, whether it's trading futures, trading micros, trading options. Pick whatever you want. I mean, I trade them all. And in fact, I tell everybody, I'll trade cockroaches if you give me a liquid market.
Yeah.
I mean, give me a liquid market.
Cockroaches trending. Let's go.
All you care about is liquidity. Is that not correct?
Yeah.
For the most part, yeah.
Right. I mean, so at the end of the day, but people, there's so many good strategies that you can use now that you can limit your risk and still get the massive benefit from the upside or the downside, depending on which side you're playing the market. So why take the chance and the cost of using naked options when you can cover them up as far away as you want, but you cut the margin down? And margin rates are no bargain anymore either. Margin rates are 9 or 10% right now.
Futures. Well, you're talking about borrow costs. Yeah, I was gonna say margins on futures are absolutely asinine these days too.
Yeah, they're all asinine to hold overnight, but they're pretty good trading during the day, right?
Yeah.
Those are good. Yeah.
Exactly.
I mean, where else can you control $360,000 for $500 to $1,000?
$500. If that doesn't scream a blowout, I don't know what does. But yeah,
exactly.
Yeah, for sure. So Bubba, I'm still hearing beautiful things about your daily trade finder. Tell me more about this, because I still am not on the list. I need to get on the list. Mike tells me all about it. Put me on the list, please. Tell me about it.
I'll put you on it right now. I mean, the trade planners, I'm looking, they've come out with, there's daily options in the SPY, IWM, and QQQ.
That's what you're doing, those three markets essentially.
And then on Monday, Wednesday, you had NVIDIA, Amazon, Apple, Tesla, and a number of others. So they're Monday, Wednesday, Friday.
Okay.
And then any stock that has a weekly expiration is available on Friday. So Friday, in theory, could be our busiest day.
Right.
Because we could have tons of trades on.
Yeah.
Tell me how this works. Tell me the theory.
What I'm looking for is I want to get, I don't sell a spread unless I can get 40%, 40 cents per dollar. Okay. So I'm risking 60 to make 40, but I've got time on my side, and we call it, beat the clock, right? I got the clock to the close. Well, today I'm not beating the clock. Just full disclosure. Again, I always tell it like it is.
Dude,
we're short USO put spreads, which are profitable at the moment. We're short the SPY call spreads, which are getting blown out at the moment. Now, obviously, anything can still happen, but right now, today is going to be probably about a $20 or $22 per loss contract, per contract loss. But overall, every day I look, and if there's action in the market and I have a reason to buy, which means I'll sell put spreads, or a reason to sell, I'll sell call spreads. And I'm going to use any one of these open markets. And there's a lot of days that I will not trade. In fact, today was a day that I said, I probably shouldn't trade today because it was wild and it's thin. The problem I have now is how thin the volume is in the market.
Dude, seriously.
So they can get away from you. But over time, I mean, we're going to be, after this week, we're going to be like 19-3 on total trades.
Dude, that's great.
Wow. Nice.
And again, they're the three were losers. But we're going to be, at the end of this week, we'll be up about $130 per contract. So if you trade 10 contracts over the last 2 weeks, you'd be up $1,300.
I need in on this for real.
Yeah.
Mike is like swearing by it. I keep telling him like, okay, I'll get on it.
I'm in.
Yeah,
You're in. I'll take care of it. I got you. I got you covered, baby.
Rob, we could actually listen. Let's piggyback off what he's doing. 19-3. We could kind of play with that with a little,
Well, listen. I think some of your stuff would really help some of my stuff. See, there's where I think that the big edge comes in, and we could really go a little bit bigger.
Yeah.
There's where we have a lot of synergy because we both came from a similar background.
Right.
Yeah. I mean, I was an actual day in and day out floor trader trading 20, 25, 30,000 contracts a day. I was doing a lot of arbitrage. It wasn't all straight. I'm taking plays. I traded a lot of boxes. Right.
Yeah.
Those days we only
you see big paper walking in. You're like, okay, I'm on.
Those days we only had quarterly options. We didn't have daily or weekly options. We had quarterly. Right. So your objective was to, buy a five, and the spreads were mostly $5 wide. We didn't have all these tight little spreads.
Yeah,
so
you didn't have tight spreads.
$5 wide. So if you
could have huge theta decay, right? Just huge with the rope.
If you could buy a box for 4 3/4 or 4 5/8, you can lock that profit up and let it expire later and take the money later. Which is how Susquehanna and CRT and all those firms started. They came in doing the reversals and conversions of the OEX against the S&P, against the future.
They were arbing.
Of course they were. That's what we're doing. So they would come in and they would give you a chance to make money. Okay, they'd give you 30 seconds to take your profit and run. If you try to fight against them, you're going to get run over. But they'd have to pay up on one side and give you an opportunity to get out. Okay, because they were going, as soon as they completed, they had every 15 minutes, they got new sheets, right? That gave you their value of what the option should be.
Right, based on their matrix, right?
And for those who don't know what I'm talking about, reversals and conversions, you buy a call, you sell a put, you sell the future. It's a neutral position, but if you can grab an edge on one side, you've locked in that edge, it's over, the money's in the bank. Okay. Yeah. And a conversion, that's a conversion. A reversal is the other side. You buy the put, you buy the stock, you sell the call. It's formally known a collar if you really want to get into what it's all about. But that's what they were doing. They were doing these ARBs all day long. And the problem was they were sucking the paper out of the pit because that paper never flowed back in.
It never.
Okay.
That's why we've seen some lowering in volume. And that's why, there isn't as much order or paper flow. And of course, obviously, as a retail trader, which is what I am now, I don't get the same edge I would get. I'm not making a market, right?
Yeah.
I'm not trying to buy the bid because I know that if I buy the bid, I'm really buying the offer. right?
Yeah, right.
I mean,
and you are. Yeah.
So this is a different philosophy. So you need to adjust to the different philosophy. You need to adjust to what the markets are doing and what the markets offer. So now, the daily trade finder, we're looking to beat the clock every day. Now, we won't trade every day because if I don't, if there's nothing going on, I don't see the point to get involved. If I can't get the credit or the premium I want to get, I won't get involved.
So you're selling covered everything, right? You're selling.
I cover. I refuse to sell naked.
Okay? No. I'm not saying that, but you're always on the credit side.
I'm always on the credit side.
Love that.
Yeah. And in this particular trade, the daily trade,
time is not our friend, right? We know that in options for certain.
Now we do a lot of what I call weighted double diagonals.
Okay. Calendar spreads.
So it's almost like a weighted iron condor or weighted diagonal that goes out, but we do the double. So we take neutral positions. We put on a trade in Tesla this week at 350. Bought 2 puts, bought 2 calls, sold 1 of each in the middle. Hell, the Tesla's up at 407 right now. So we got long. Once Tesla passed a certain point, we were long. So the position delta-wise starts out neutral, okay? And now we're dead long.
Yeah.
Okay. And making money and rolling up that call and keep cashing the ticket so that if it does turn around, I still got money to make on the short side if it turns all the way around, which it's got earnings coming out next Wednesday. So that could turn it around. And if it keeps going up, I'm still long. So I'm making money. But when I put the trade on, it was delta neutral. And then I get to collect premium on it 3 days a week to reduce the cost.
Very nice. That's awesome.
And we do that with the SPY and the Q and IWM because every day I get to sell premium. Every day I'm selling credit. And all I'm really doing is reducing the overall debit that I paid to put myself in a position of profit. And you can see, I just taught last week, Ryan and Rob, on my Saturday call, I just taught everybody how to roll these up as one. I said, we don't want to get out of these positions anymore. We want to continue. We want them to be continuous, kind of like the S&P is a continuous.
Yeah. You want to keep it rolling.
We want continuous trading. So we're going to roll up the positions to capture around and take a long position or a short position and turn it back to neutral and continue to collect that premium because that you collect every day. And then we're going to put ourselves in a position. So it's working out really well. And again, fortunately, I teach everybody and I understand the market pretty well. So it works out pretty well.
What a great spot to buy on Tesla. I actually had a bunch of alarms go off in here. And I've been gone on vacation, as you know. So unfortunately.
You're taking your kid, baby, to Disney World.
I know, right? Hey,
you were in Disney World. My wife was in Disneyland. She's on a cruise somewhere.
Oh, nice. She went to the California side?
Yeah, she. My first cousin there. Her husband's a big wig at Disney, so they took him to Disneyland last Friday, and then she's been cruising in Mexico. So,
what did you say, Rob?
Oh no, I was just looking at the Tesla chart. So, basically,
this is a great buy.
That gap perfectly.
355 was a steal, Todd.
Yeah, I mean we were actually playing. There's a lot of trades. When you look at the option world, okay, if you want to figure out how much is the market pricing in a move, right? The market will tell you how much it's expecting to move.
Yeah, absolutely.
Right.
Yep.
Okay. And the way to do that for those at home, okay, is if you look at the money straddle in any expiration, okay, it can be today's expiration. You could look right now, like right now in Tesla that expires today. I'm just going to, since we got that up, I'm going to give it to you right now. Tesla that expires today is expected to move the rest of the day. It's got about a $4 to $5 move coming the rest of the day, plus or minus that way. Which way I don't know, but based on the option pricing, it's got a $4 to $5 move coming the rest of the day.
Here, I'll just pull this up so people can, what you're talking about, the at the money straddle.
So the at the money straddle right now is trading at approximately $4. So if you multiply that by 1.07, which is actually the Black-Scholes calculation, okay, that tells you what the expected move is for any stock, any time period.
Right. And what expiration are you talking about today?
I was just talking about for today, just for kicks. But if I went out to next Friday, the 24th,
yeah,
Tesla's expected move for next week is about $33.
Oh, I see. So you're basically taking the
at the money straddle,
yeah,
and multiplying that by 1.07.
Interesting. Okay. Why 1.07? Tell me
that's the Black-Scholes calculation.
Oh, okay.
that they use. That's just the easiest way. Everyone wants to know that's the Black-Scholes calculation among all their other many calculations.
Yeah, 1,000.
But that's a simple look, and you can see how it changes. And I can go out a year from now and tell you this is based on current volatility,
right?
Okay? Based on current markets, this is what the expectations are. Now we all know, or maybe you don't know. I know you know, but maybe not everybody knows. But if volatility rises, okay, then prices are going to rise, and the expected move is going to rise because volatility. You know, the news reporters are so false on how they report what the volatility index is.
Yeah,
the volatility index is on options that are bought to open versus sold to open. It has nothing to do with whether they be puts or calls.
Okay, I got a question for you. This goes way outside the spectrum of what we're talking about, but you're an options guy, and you were in the futures pit. You know all this, so I'm going to ask you, why do ES futures options always have extremely low implied volatility compared to SPY or SPX? Why are they always so low? You know, I can't figure it out.
Well, yeah, because there's a lot more people trading them. They do a lot more volume per dollar. I mean, figure it out. If you multiply out the contract, like today so far, the micros have traded just about 1 million contracts.
Right.
Okay.
Yeah.
So if you compare that to the SPY, that would be 5 million in the SPY. Okay, to be equal. It's a 5-to-1 ratio. So there's more trading, and they're more pinpointing. But volatility does get high there as well, just not quite as high.
Well, does that mean you can always get a better deal buying futures options versus SPY or SPX?
If you can find good liquid futures options, you can always get a better deal. You can get a better deal trading the SPX options. But of course, you have to remember the difference is that if you're buying one ES option, it's times 5 spiders. If you're buying one SPX option, it's times 10 spiders, right?
Right. So it's definitely way heavier for sure.
But I mean, yes, and of course you get a better tax break on trading futures versus options.
Yeah, that's
it's a big deal. Yeah.
But again, the more paper, the more order flow that's going in, the tighter the volatility is going to be.
Yeah.
That's why you look at, Tesla's trading at a 58% volatility right now. Normally it trades in the 40s. Okay. The SPY right now is probably, if I were to guess, I would say the SPY is probably about 9 right now with how the market's been railing, but I'm going to look.
Let's see. Implied vol for today is actually a little higher than I anticipated. It looks like it's about 18.
Yes, it's very high because they're expecting some news. So they're a little bit panicking on news, but we know that's going to collapse out. But if you go out and look at
the 20th is 9. Yeah.
If we look at May 15th, I got to put my glasses on. I can't see that small. We look at the 15th, it's 15%. So volatility is a little high right now for the SPY. The normal range for the SPY is about 12%.
Okay. It's good to know. It's interesting.
And when it starts getting much over, then you want to look to sell. I mean, you always want to sell premium. Okay.
Yeah, I agree. 100%. That time is not your friend here. Like, it's terrible. Yeah.
Unlike futures that trade pure, right? I mean, you're the futures guru.
I don't know about that, but yeah.
Well, I mean, you guys are,
that's what we do. That's what we do. Yeah, futures.
You're trading a pure market. There is no. If you're an options trader, you have to take into concern the volatility, right?
For sure.
Because there's times you can make the perfect trade.
Yeah, and you still get it. I had it happen the other day. I bought calls on a Friday. We gapped open 100 points, and I was break even when the market.
Because you overpaid for the option.
I'm so pissed.
It's not your fault. Again, it's not. The real thing is understanding that if the expected move is bigger than what the stock can actually move, which happens because remember, when people are buying open, if you look at the options chain, the number one trade every week is call buying. Okay. The number 2 trade every week and very close to the number 1 is put selling.
Yeah, I figured.
So that balances volatility because you're buying to open the calls, you're selling to open the puts. So the reason that the bozos on the news network say it's the fear index is because what's really happening is people are covering their short puts and now buying puts, okay? But they don't have any idea of how the option
what
market
the mechanisms are that are going on behind the scenes.
Right?
So when you're buying options and you're buying these spreads, one of my early complaints when I was looking at options, this is a few years back, was I was actually talking about this with Ryan yesterday. Is like during the Obama administration, when we had like no volatility, I put on like these condors and things and just like ride it out, right? Because the market wasn't moving. And getting the right fill price that I wanted to get sometimes like took forever or would just never happen. So like when you go and you're buying an option and you say, okay, this is the price I want when you're buying, you know, something with a put in a call or a couple positions, how long do you wait? Or do you just like get in at what price you prefer? Or
I use the midpoint.
Okay, you just use the midpoint.
I'm not trying to price options because I'm never going to get the edge on the market maker, right?
Right. So you just get the midpoint, and then how
I go to the
frequently are
midpoint,
filled at midpoint?
And if it doesn't fill right away at midpoint, I know that from midpoint we're a penny or two in either direction.
Okay.
Depending on what I do. And I'll take the fill because again, I'm building an overall position.
Yes.
I'm not buying one option. I'm buying a series of options at the same time.
Right.
So I will work around that order and I won't chase them. I mean, if I determine that a spread is worth $2.50, okay, I'm willing to go as low as 245 or as high as 255. Anything past that, I'm not going.
Yeah. Okay.
I'm not going to chase. You know, one thing you learn about chasing trades, and Ryan, I'm sure you can attest this, but I know you've never done it. I have.
No, never.
No, never.
But when you chase a trade, most of the time you end up being wrong.
Oh, yeah. Almost every time.
Almost every time.
Yeah, it's FOMO big time. It's just terrible.
And that was when I was playing around with options. That was always sort of like the part where I was like, why am I not getting filled? I put myself in at mid and nothing's going on. And so
you got to adjust a little bit because if you're experienced, now I could do this, but see, because I'm teaching it and putting on the same positions as everybody else puts on, I don't do things that I know how to do. Like I could leg some of these trades.
Yeah, you could leg it in and do a bunch of other little.
Okay, and I can get better pricing most of the time if I wanted to try to leg it. But because I want everybody to have the same results, I put the orders out usually on a Saturday. So we're all working in the queue on a Monday.
Yeah.
Okay. So, but again, there's ways to do it. But certainly, you know, if you've got the right idea and you're good, if you're selling premium, if you give up a penny or you give up 2 pennies, it's $1 or $2, right? So it's not really that big a deal if you're going to grind out that premium.
I brought this up. I don't know if you've ever seen this before. I ran into this by accident. This is a chart on TradingView where they measure the 2% out of the money put writing index, basically. And it's just kind of interesting to look at. This is not 2%. This is just the put writing index, and this is the 2%. And it's just wild to look at, you know, I mean, it has its own market, basically. Like they're basically, you can chart the actual put writing index, which is just insane. So it made me think of it when you said that it was the second largest trade. I was just, you know, using this as some sort of, you know, you could actually use this as an idea of how the market's going to potentially continue to move, you know, just because obviously, you know, puts fuel the market, options fuel, et cetera, et cetera. So,
no, I think it's important that those who want to trade options understand that you're not always getting a fair price. You know, there's guys that will go on TV and say, buy some cheap options, right? There's no such thing as a cheap option.
No,
right? The only options are fairly priced except when they're expensive.
Right, exactly.
Listen, I was a market maker, right? Now, if we got real crazy and real busy, let's say a guy comes in and says, you know, 155 calls, what's your market? And I go half, 3/4. Okay. And then I fill him, but whichever side. And the guy comes back in again, and I know he's coming for the same thing. I'm going to change the market. Okay. I'm going to make the market wider. So what's going to happen is what people don't understand is when volatility gets too high, it's hard to make money buying an option because you're looking for too much expectation.
Yeah.
Yeah. You're looking for too much.
And if you're not going to get in and out right away, then you're not going to make any money. So I think it behooves anybody who wants to trade options to understand the volatility that they're paying and making sure that they're trading in a market that offers liquidity.
Yeah, for sure. That's true. It's true. Yeah.
I mean, you know, they're not all liquid. So to tell me, I watched your webinar yesterday.
Mm-hmm. What?
Emerging Edge. Yeah. I want you to tell everybody listening now about Emerging Edge.
Rob, I'll let you. Rob, please be the guest.
This
is your brain.
basically, part of our early discussion when we were talking about different quantitative systems, and originally it started out with just Ryan and myself building a backtesting engine, just because we didn't see anything in the market that we felt really comfortable with, or things that we could lean on for backtesting for futures. Because, futures have all the weirdness with rollover and, all the things that just are not super fun to deal with. And so we started going down the path of like, okay, we're going to build this thing mostly just for the two of us
that's how it started.
To trade. I will come up with like quantitative ideas, and Ryan's got enough time in the market where he's like, what about this? How do you think about it this way? And so we had a pretty good synergy of how we were thinking about it. And one of the things, we were looking at is sort of like this 10 o'clock candle, 1 hour candle. We trade off of hourly bars and 4 hour bars typically in our futures kind of work. And we were noticing that, we sort of had outsized moves on that 10 o'clock candle. Just a little bit after the open, if you're going to get a big pressure move, it's in that sort of 10 o'clock to 11 o'clock window. And so that was our first strategy. We started looking for ways of how to capitalize on that breakout. And then how do you figure out, okay, what's our window of time that we want to break out, and where does that have edge? And that's where the strategy came from. So it's like basically an opening range breakout. And we consider the opening range, at least for this strategy right now, sort of like a 15, 17-minute window that we can optimize. Like every quarter, we can refresh it and check it out and change any parameters that we need to. And we look for, a break in that, a little bit of a pullback and some order flow to say, this thing is really driving higher. And so by sort of capturing 3 or 4 relatively simple things, that's where this first big strategy came out. And when we were backtesting it, I was a little worried at first because it was so good, because the first year it was like a 70% return, which is, as you know, insanity and like not real. And so we went through it, and I went through it, and I went through trade by trade, day by day. And it was, it would go 2 months with just sort of being flat, or sort of like, just carrying the water, not doing anything. And then it would have these big ramps, and then it'd be a couple weeks and then ramp up again. And, we're not trying to over optimize anything, because as you know, I can give you a perfect looking back test that next week will fall on its face. Right. So this was really, really, we were trying to like not squeeze the data and give us the perfect, most optimized, best answer, but like with some fairly simple, something we could write on the back of a 3x5 card. Here's our 4 trading rules. What does this look like? How does this mature? And how does this kind of like work out long term? And we've been really, really happy with it. We've been actively testing. We've been actively trading it ourselves for weeks now.
It's been working great because I get the results. And
we've been doing.
But what's really good about it though? It fits my golf game, because
exactly.
I can be done by 11 o'clock every day. And if I happen to have a runner where I get to hold that trade longer, I can put a trailing stop in and leave.
It's perfect, right? Like it really is. Yeah, it's been pretty remarkable. Like
is that not right, good boy? You want to take the dog for a walk. You had a position on. I heard you getting all these fills while you were gone walking the dog, and here you are. You come back, make a little money. What's wrong with that?
It's been really nice. I mean, and I can attest to that. Like Rob was slaving while I was in Disney World. And, I'd call and check like how to go. He's like, we're up $900. I'm like, sweet, back to the roller coaster. You know what I mean? So it is nice. And again, I want to just say one thing, and I've said this before, and Rob, Rob is a very humble individual. He doesn't give himself enough credit. And I'm just going to throw this out there for people who may know. I'm sure, Todd, you're a futures trader, and I don't know if you've been into the automation side at all, but there truly is nothing out there for futures traders right now to optimize strategies. Now, you have TradingView, you have NinjaTrader, and you have TradeStation, but the backtest results are kind of fluky and they're inconsistent. You could run the same test on that system 2 times in a row and get 2 different results, and the tick data is just inconsistent, et cetera. And so, Rob was kind of, like he started to mention, he was satisfying a need for us. He was building a backtesting engine so that him and I could automate our strategies. And of course, me being the guy with huge eyes, as soon as this come out, I'm like, dude, this is amazing. I'm like,
Yeah,
no
I think you
one-
were at the gym, like like on the treadmill or something when I sent you the first stuff, and you're like, "Get off! What are you doing? Like, this is crazy."
Yeah, right. I remember because he's like, well, I'll be back in 2 months. I'm like, what do you mean? He's like, I got some things. I'm like, he's like, finally, he's like, I got this covered. So, I mean, Todd, he built this program that really should have took a whole team of people. I mean, it's 800,000 lines of code. And he was like chained to his desk for months. He didn't come up for air.
Yeah,
And,
like literally Christmas
Did
Day.
you give him an
Like I was in
oxygen
my
mask at
office.
least?
yeah, you were working on Christmas. I remember your kids were not happy.
Yeah. I was like, you guys, I feel bad about this, but this is like my life's work right here. Like I really was pouring everything I've learned in, 30 years of everything from project management, development, software development, architecture.
You watching what's going on here?
Yeah, we're pulling back. Yeah,
Yeah, it looks like we've got a news event.
we hit that big.
Anything.
Rob, believe it or not, I think we hit that call wall up there. That big call.
Yeah.
Wall. 86.
I was gonna say, we need to share with Bubba like our DEX work and all the options work we've done, how we pick futures.
I would love to do the option work because I think it's a great tie-in to the futures.
For sure.
Okay, and I think again it gives the DTF and other things that we do in options is just an add-on of stuff that has very little risk, very high reward.
Yeah.
Okay, because I know if I put out new trades tomorrow on my call, I know the exact debit that I'm paying, which means that's my max risk.
That's your risk that's locked in.
And I know that every day from that point forward, that debit's going down because I'm selling premium every single day against it.
Right.
Yeah.
Okay. So I think that is something. I mean, I think there's a great synergy here, but just in regular bullshit, right? Just hanging out and talking. Yeah. We're having a good time. But I think, you and I and Rob will have the same objective, which is we all want to make money ourselves.
Yep.
But we're all those who like to help others.
Yeah,
make
I like
money
to see
as well.
people win, for sure.
Right? I mean,
it's so awesome to like see like people who have no idea what they're doing in trading coming in and walking away, like passing evals within a couple of weeks and like already on their way. It's really fun to watch, actually. Yeah. Really
everybody asks, why do you do this? I said, because I can. I mean,
yeah, exactly.
The perfect answer, actually.
That's a really
well.
Good answer.
I mean, listen, I'm going to be trading anyway, so why not share my knowledge with others? Okay, it's not going to affect me, and it's
not like the edge is going.
I feel very fortunate. I got very lucky to end up in this career. It wasn't a career plan. Okay.
I mean, Bubba, you say lucky, but bro, listen, one thing I can attest for being a younger version, like following behind, dude, we worked hard for this. This was not a free ride. You know what I mean? There was a lot of pain involved in getting, I'm halfway through your journey and you're double my journey. I can only imagine what you've been through, right? Like
I worked my ass off doing that. It ain't, listen, trading is not, if anybody thinks trading is easy. Okay.
Dude, please don't act like it was like by, it worked out for you by some miracle.
It's the hardest way to make
what worked out for me by miracle was finding the trading floor.
Okay.
Once I got there was a lot of ebbs and flows and some mighty good beatdowns. Okay.
Oh, yeah.
Listen, I'm not afraid, right? I've got my ass handed to me on a number of times. Okay. But at the end of the day, if we can share our knowledge, just like by doing the podcast, right? Doing this thing together and we can add to somebody's life. Doesn't make you feel good when you can help somebody out and you're doing it because you can. I mean, listen, I could just sit home and trade and be done every morning in my time in Vegas. I could be done by 8:30.
You and Rob are on the same time.
Yeah, we're on the same time.
I'd be out playing poker by now. Because if I'm not playing golf and I'm not trading, I'm playing poker.
Fair enough.
I mean, I play poker almost every day.
Do you?
Yeah. Listen, I lived at the Mirage Hotel for a year.
You must be pretty good.
I can play.
Yeah, you can play.
It's like trading. It's no different than trading.
Yeah. Okay? You're playing.
I lived at the Mirage Hotel, and I think it was 1993 for the entire year. Played poker every day. I had clerks working in Chicago, so I could call my orders in, whatever I wanted to do. I played every day for a year, and that was before poker was what it is now.
Right.
I made a living for a year; it just wasn't enough.
Right.
But I had a great time.
Well, that's
and you're living in a pretty nice place. You just take the elevator down to work, and
yeah, right.
Yeah, now I got to sit through traffic for 6 minutes now.
Hey, so you made a comment earlier about this move up on no volume, and I thought it was interesting because we have also noticed that relative volume has been negative 30-40% all week as we've continued to grind higher, which is pretty typical of all-time high trading and negative and positive gamma regimes. But I feel like it's been a little bit over the top lately. For instance, this morning when we came into the day, we were at negative 43% relative volume, which is extremely low. And then we had this news event and they spiked it up to plus 40% relative volume, which was such an insane difference. I've never actually seen that happen before. Give me your feel on this whole no volume shit. What's up?
My real feel is the economy is in a lot of trouble. There's a lot of people that don't have investment capital right now or trading capital right now. Now, obviously, with prop trading, you don't need trading capital, right? But I believe that the markets are looking for a place to take a big beat down. I think there's a lot of warning signs from defaults on car loans, defaults on houses, to BlackRock not giving you your redemptions. There's a whole bunch of things out there that we continue to ignore. It is my opinion, I said this when we started, I believe that this is a total retail rally, which is pension funds, 401ks, and that type of money that goes in every day no matter what.
Yeah.
And I think Goldman Sachs, JP Morgan, Citi, and all the big banks are waiting to pound on them, They're letting them have their way in here because, again, you look at this volume, it is pathetically low. Each and every day. Now we've gotten lower over the years, but that's because, one of the big changes when the SPY came out and the Q came out, I don't know if you're aware, Ryan, because this was a long time ago, but the companies used to do their own baskets.
Yeah, that's back before
that's what used to make Triple Witching Friday. Witching Friday, because they were dumping their stocks or dumping their options, and they were creating before the SPY and all these things came out. So that took away some of the volume from trading. But the recent volume has been very low because I do believe this is a retail rally, that the big guys are sitting it out and they're waiting until they feel the time is right and they're going to give it a good whack. Now we'll see. Again, I don't trade the news. I can honestly say in my 47 years of trading, I've never read the Wall Street Journal. I've never read a copy of Barron's. And the only time I watch the news on TV is when I'm on.
Well, I have to admit, that's one thing that you and I definitely click about. And Rob, I probably, when Rob and I first met 3 or 5 years ago, whatever it was, I probably blew his brain apart with the whole, I don't give a shit about the news either. I literally do not care about anything other than when is it going to happen, right? That's all I care about. So I can be prepared for the shake. The results make no difference because the chart tells us the story, right? So I salute you in that thinking. For sure.
I mean, the charts tell the news. It's funny. I have a chat room, and I'll say, because I don't know what the news is, I go, what was the news? Because I can see it in the tape right away. You can see
the tape, yeah.
Yeah. So I pulled this up for us. This is something that came up this morning. I just thought it was interesting. So I was talking about in the stream multiple times in the Discord room. I said, I don't think I can recall a rally that was this violent ever in my history of trading. Like this is an unprecedented move. And according to the news that came out this morning, that in the past, since 1950, there's only, very few, this is in the 99th percentile of moves that we've been this extreme. And like Rob and I were talking about it, like back in 1950, the Dow was, or the S&P was probably 500.
Well, here, I'll put it this way. In 1980, the Dow was 800.
Yeah, so exactly. So what was it in 1950? Like it must have been
probably 200.
Yeah, exactly. So the proportion was probably the same in a percentage move, but the rally that we've had is crazy. And then I have to do the research on this, but this was interesting too. Over the next 12 months, the average return 19% was 17 up and 3 down for years. I'm like, could this really be possible? That would be crazy.
So that's how they come up with the massive percentages. If you go back in the history of the stock market, 8.5% year over year since the history, 10% year over year since 1950. Okay, which is why I'm always long. My investment portfolio.
Yeah, have to be.
My son at Edward Jones handles. and I hedge it here because I use options to hedge.
Okay.
Well, I mean, I want to benefit from a down move.
Well, of course. Well, and the thing is these markets, as you and I both know, they're designed to go up. I mean, if one stock starts getting weak, they just replace it with another. They're never going to come down, period. I mean, and that's what's so funny to me when you see all this bearish bullshit on Twitter or whatever. They're like, oh, we're going to zero, or, we're going to crash 50%. It's like, not going to happen. Like, just not going to happen.
Let me ask you a question.
Go ahead.
In your opinion, could you see another 40 to 60% haircut in some point?
Yeah.
Okay.
Yeah, I can. Well, here's what concerns me, right? And first off, PE valuations are crazy right now, right? Everything's overbought, in my opinion.
Well, I'm gonna verify your opinion, and then you can finish.
Okay.
The Case-Shiller CAPE index, which is the master PE ratio of the market.
Yeah.
The mean is 15 or 16.
Where are we at? 30?
They were over 40 a couple of weeks ago.
That's insane. So that's half, right? It's half.
So there you go. So okay, go ahead and finish. I'm sorry.
No. I'm with all that. The other thing that really concerns me, and again, I try not to, this is extremely macro, but the fact that the government can't cover their own interest payments now is very concerning to me. And that obviously people don't want to buy our debt anymore. Central banks are shifting to gold. Other countries are shifting to gold, and they're going to stop buying U.S. debt because we do have a possible chance of credit default, which we've never had in our history before. So again, that also is some cracks in the market. You know what I mean? So between insanely high PE ratios and government being, the thing is the Fed is out of tools, right? They only have a couple of things. They can lower interest rates, and they can open up QE. And I was just told by a friend of mine today or yesterday that he heard yesterday that the Feds are talking about expanding their balance sheet again already at all-time highs. If this is true, I just don't see how any of this ends well. I just really don't, because we're talking about a super bubble. I mean, it's,
I mean, I could see it. Look, I lived through it. I traded through 22% down in one day in 87. I traded through 2001. I traded through 2001.
Because you could go outside, grab a smoke, and come back and be like, "What's going on?"
Well, it was funny that it wasn't funny, but we were in Vegas that weekend and we heard what was going on. We caught the red eye to get back to Chicago.
Oh, okay.
Okay, but I've been through all these crashes, and there's another one coming. It's actually more healthy for the market if you really are a capitalist. These are very healthy for markets, and they actually create more opportunity for those who are trading.
Look how huge 2008
not hurt your methods.
Yeah. No, I would love a good value based.
I mean, your methods are going to thrive on no matter what.
For sure, absolutely. And to be honest, think about, everybody talks about 2008, whatever, dude. So much money was made after that. It gave so many buying opportunities between real estate and stock and everything, that so much wealth was made from that pullback. And, I think one of the issues in the markets today is they're constantly propping it up. They don't let the market run its real cycle.
The plunge protection team.
Man, it's real. Yeah. Shit is real.
Well, it's real because it's thin enough that they can make it real. But we have not had a real panic since COVID.
Right.
Right. And that lasted only a couple of weeks.
Right. Yeah.
And it was a great buying opportunity. Everybody who was with me who was hedged, they were buying all the stock on the way down, because what our hedge does is it buys stock automatically.
Right.
It takes the profit from the ratio trade and turns it back into stock and readjusts the basis of the stock.
Yeah. That's cool.
I mean, it's really cool. And someday we'll go over that as well. But so you have an opinion, but you follow your own rules, and I read your rules every day. So tell everybody about opinions are like, you can fill in the blank. We all got
like assholes.
And we all got one. When it comes down to it, yes, you can have an opinion. You can say, I want to be bearish or whatever. But at the end of the day, does your opinion affect your trading?
No, it can't. I mean, we trade the chart. I mean, if that was the case, I would have been short 100 points ago. You know what I mean?
No, but haven't you found that is one of the things that people don't understand? Okay. Yeah. It's like the news is over, and especially now, one quick story. When I traded a clearinghouse, Brandt. Okay. In those days, they had 50 or 60 FCMs, full clearing members that you could trade through. Okay. And they were all a lot of independents because they were for floor traders. we had 50 traders in this office that, we all went to the floor, but we had two 12-inch LED monitors when the news was coming out. Okay. It's like standing room only, people trying to catch the news first so they could make the trade.
Right.
Okay? It's like trading places. Now the news is already old news.
Okay? Yeah, it is old news.
It's
like this,
it's
the
already
end of the
done.
Iran conflict feels like it's priced in now, right? We're at all-time highs.
It is pretty much all priced in. I mean, there's not much. The only real news that affects is like this morning's news, okay, which was a fundamental news bomb, as we'll call it. They opened up the Straits of Hormuz.
Yeah.
Okay. Nobody knew that was going to happen this morning. But I think people have to understand that you have to trade what you see. And you can't have an opinion. You can have an opinion, because I do. Listen, I tell everybody, I think we're going down 40 to 60%.
Yeah.
But I also tell everybody, I'm not getting out of my positions.
Yeah, right.
I mean, I'm trying to trade from the short side if I can. If there's an opportunity, and if there's no opportunity, I'll trade from the long side. I'm agnostic when it comes to the market.
Yeah, price is really truth, and the news is just like ambiguity and volatility around that. And you gotta trade the price and what's in front of you. And it's really easy, especially like when news comes out, and if you've had an economic background like I do, you try to like figure out, like, is this gonna happen? Like, like the price is what the price is, and all the other stuff is like, unless it's like a huge miss on something or a big surprise like you're talking about, don't try to interpret like what's coming out. Like,
hey, Rob, I'm gonna kick Rob while he's down. He still does it all the time. He's like,
I still do it all the time.
The numbers came in terrible. Why are we rallying? We're like, fuck the numbers.
Rob is too smart.
It's
right.
It's like,
the guys that are really smart. I'm not that smart.
That's why you have to go into quantitative stuff. Because if I will overthink myself out of it.
Guys that are that smart, they're too. They can't figure. It's like engineers, right?
Yeah, engineers they're so.
But engineers, if they learn and they listen, they make the best members.
If they can get over that hump.
I had a guy that was a genius that I used to bet with, and he was a loser. He couldn't understand. He would do all this analysis about the game. And he couldn't understand how he could lose. I said, because you're not figuring out what's really going on. You're trying to quantify these numbers, which are not necessarily quantifiable because they're not a chart. A chart is somewhat quantifiable.
Yeah. Yeah. And it's funny because there's a lot of underlying tones in the market. For instance, when they're looking for rate cuts, bad news is good news. You know what I mean? It's shit like that it just doesn't make, to somebody who's trying to put it all together, that doesn't make sense. What do you mean?
And what a crock rate cuts are, because of course we know the rate cuts don't get passed on to you and me.
Yeah, I know, right?
If you guys haven't noticed, I know you have, but if the people out there haven't noticed, the Fed's cut 300 basis points. The 10-year notes are up 400 basis points.
Right.
That's not the right ratio. When you think about it. So rate cuts are for the banks. The Fed is owned by the banks, for the banks, and that's why they get bailed out when they fail, and they'll get bailed out again because I think they're going to fail again.
Yeah.
Do you have any opinions on the sort of disconnect between the normal correlation of gold and the market right now?
I'm glad. Thank you for bringing that up. Thank you, because the market, gold is moving with
gold.
They're both going
up together, by the way.
Big sell-off. I think it had its big rally. I think gold anticipated what was going to happen, which is, again, I think priced in. I think it overreached its first target. Okay. I think we saw, I don't know, I think about 10 days ago, gold hit 4,100 overnight.
Yeah. I'm still long.
Okay. Listen, I got physical. I
can see that vault door behind you.
I always tell everybody that the time I sell physical, even when I'm dead, my kids will sell it as soon as I drop.
So you're Scrooge McDuck, basically.
That's exactly.
But I think that gold and silver got too far carried away.
Yeah, they did. Okay. They have a little over.
So it's just a natural ring.
I think the other thing that nobody talks about is that if you wanted to sell your physical silver, especially back when it was up at 120,
nobody was taking it.
Nobody would take it. They were offering about $25 or $30 below spot because they were so overwhelmed with it.
Oh, wow.
I think now we're seeing another run up, and I think we'll see 6,000 this year, if not more, in gold.
Yeah, I think so too. I mean, I know Goldman's still pinning the 5,400. They say is the average price.
That's a great. Look at where the chart stopped. Right at support was the bottom.
Yeah. Oh yeah. This is what I bought right here.
Yeah. I mean, I think. So I think that it is going with it, but remember, and this is important as well for everybody to remember, that everybody likes to refer to the dollar. Is the dollar strong, commodities are weak? Well, that's not necessarily true. Okay, it does work in some occasions, but sometimes one market moves first and the other market's just catching up.
Okay. We were looking at the dollar. The dollar hasn't done shit. It's just sitting here. It's been back
96 to $1.
2025, just going back and forth. It's crazy. Yeah.
So I think, to answer your question, Rob, I think that gold did its thing. I just think it did it early, and I think that got too overwhelmed. And I think we've been consolidating for the last, 6-7 weeks, and I think you're probably ready for another run.
So riddle me this then, Bubba. For instance, this was the gap down on Sunday that the ES did. Same gap that just ripped everybody's face off, right? Took it up. This was today's push on the straight or whatever, the straight, or whatever the name is, Hermes, whatever. And so, like Rob was saying, it's all running literally in lockstep. Right now the ES is pulling back, gold's pulling back. It's just the most uncanny, like step for step relationship right now. I mean, I'm long gold, so I'm happy about it, but I just don't quite understand, like Rob was saying.
Well, I think that gold's telling you that inflation is going high, the debt is going higher. And I think the reason gold came down in the first place is when we had that down move back, 6 weeks ago?
Yeah.
Okay. Unfortunately, most people will sell their winning stuff first to support the dogs that they have.
Isn't that sad?
The margin calls they're getting.
Yeah.
Okay. And I think I think gold's making a nice move here. I think it bottomed, and I think it's getting ready to break out to the upside. And I can see 6,000 easy.
6,000, huh? It'd be quite something. So my mom, like I was telling you, my family they have jewelry stores, and she was telling me that the price of gold is absolutely killing them. That people were just 6 months ago or a year ago, they come in and something was $2,000, and literally the same thing now is almost $4,000. People don't want to buy it no more. They won't buy it. And she's like, it's nothing I can do. It's not my margin. I'm literally just passing the cost along. Right. But she told me, she's like, it's absolutely murdering her business. So and then you got something. Silver used to be $25 an ounce. You could buy some silver earrings for $50, and now these same things are $700-800.
I got some at $5, baby.
Oh, nice.
Actually, I have some. My dad and I started collecting silver quarters back in 1964.
Oh wow, that's awesome. That's awesome. They stopped doing them then, right? That was
1964. It was the final year of silver.
Yep, that's cool. Look at USO. Just this is CL.
Yeah, fortunately it's rally, so I get a chance to. I may have a chance to get out of both these trades as winners.
Oh yeah, you're right, because the
USO we're short the 113-112 put spread, which is a winner right now.
USO.
In fact, I'm gonna tell him to close that right now.
Nice.
Give me a second here.
Nice daily level there, actually. Look at that.
Yeah, this is a great level.
It expires today, so we're gonna close USO. Hold on a second. I don't want to be talking. Well,
no, it's fine. It's fine. Make your money. Yeah,
this is perfect.
Well, I'm going to tell everybody else before I do it myself. I'm going to tell everybody else to get out. And that's
I do that too with screenshots for the room, and then I look up. I'm like, fuck, I should have closed that. That was 5 points. God damn.
Exactly.
Yeah.
Let's see. Where is it? Let me just get a price where it's trading. Sorry, people out there live streaming. I'm sorry, but I got to look at this.
Listen, man, they're fine. They're fine. Listen, we're making money. That's all that matters. So, Rob, speaking of, since he's doing his thing, did the Scout Bot take any more trades?
I think so. I think it's even now.
Okay, that's all right. The other one made good money, so I'm happy. Let me pull this up here. I'll show you what's up. So, Rob, let's see.
Yeah.
Let me find this. I was looking for. So check this out, Bubba. When you get a chance, I want to show you.
I'm listening.
So we're running this emergent edge 15 right now, but this is another one that Rob is. So it kind of how this is going for the most part is I have a pretty good feel in the market. I come up with the strategy, and then Rob makes it profitable because that's, he's working the numbers. And so this is one that I built that was a breakout strategy, and it trades minis. And this thing is crazy, actually. Like, I love what he's done to this, to the point where it actually moves so fast that our bot is moving faster than the relay that's coming from the broker
Really?
to platform.
Yeah. That's pretty slick. How is the execution?
Rob, please.
Pretty good. I actually track slippage and everything to, sort of model it out to go back into the back test to improve it. But it's pretty quick. We don't have to have like co-located servers or anything to make it work, but everything is pretty much done less than 50 microseconds.
Now, have you tested this on any other products?
Not yet. It wouldn't be hard to. It's just that we did it with ES because we felt like we knew the product a little better, and it had enough liquidity to bite in.
You knew the product a little better. Let me ask you a question. Does it really fucking matter?
Yeah. No, I just need to download the data and make it happen.
I don't want to tell you about. Listen, you're very successful. I don't want to tell you what to do. I'm just curious. To me, a chart is a chart, right?
Yeah. No, you're right.
It's my fault, honestly, because the thing is like, we design each strategy based around the mechanics of that particular asset. For instance, the order flow mechanics that we have in ES won't be the same for NQ. And the ability to put certain contracts on as far as size, capacity constraints won't be the same. So, because I always default to ES, that's kind of where we started. But Rob,
we're going to expand.
In the background, he's always working on something.
Isn't NQ more liquid though?
I don't know. Is it?
We get a little bit more slippage in
contract.
Yeah.
Right now, the micro NQ is traded 1.5 million, and the S&P is traded 1 million.
Okay. I didn't realize it was that big of a difference.
Yeah. It's the difference is the
two clunkers of the group.
How many contracts traded at a specific price? That's the only difference. So they have more volume, but it's spread out over
the Dow and the Russell. They only do about 200,000 a day.
They're small. They're like CL and GC.
And I love the S&P. Don't get me wrong. I'm a big fan of what you do, man. I don't like to read, but I read your stuff every day.
Thank you. That's very nice of you. Yeah.
I'm more of an audiobooks guy, right?
So Rob, are you saying that it's because it's the volume that's traded at price, not necessarily overall volume? Is that what you're saying?
Yeah, right. So like in ES, if you just pick a price at random, you'll have a few hundred contracts trade there. Well, NQ you can have just 10 contracts and it'll flip up another tick.
Gotcha.
Right, but by the end of the day, it'll wash itself out. Like right now, there's about 2,500 per price.
Yeah,
I get what you're saying. Listen,
it would just
there's a big, what the big difference is 1 point in the NASDAQ is 4 ticks.
Yeah.
Right. So there's a little bit more different to it, but from a chart standpoint, I'm just curious. Again,
I
love what you guys do.
The way I
change anything. I can trade just the ES.
No. It was one of those things where I'm also looking.
I'm happy with that.
When you were trying to get in really fast with the with NQ, sometimes like if I only had like a 5-point stop in NQ, that's just not enough because it just has a little bit more volatility. So it's just expanding it and playing with it and getting it right.
I trade live every morning with my members, right? Mavericks. We trade for like the Tuesday, Wednesday, Thursday. We did double headers. We did 8:15 Eastern for the news at 8:30, and then we came back right before the open.
Oh, nice.
But we trade 6 products: the 4 indexes, crude, and gold. Okay, but this is what you're going to laugh. Okay, my stop in the Dow is 100 ticks. Okay, 100 ticks in the Russell. Okay.
What's that equate to point wise? I don't know.
Well, it equates to $50 per contract.
Okay.
Right. $10 in the S&P, $10 in gold, and $100 points in the crude. You know what my stop in on the NASDAQ is? 50 full points, which is 200 ticks.
200 ticks.
That makes sense to me.
No, I mean, because it's so wild. I mean, you've seen that. It's like an accordion ripping up and ripping down.
It does have that squirrel on crack quality.
It's like people used to say, I don't use stops because they know where my stop is. I said, nobody knows your stop is.
Nobody knows
where your stop is. The truth of the matter is that when I was a market maker on the floor, we knew not where your stop was, but we knew where people were lazy. We're going to put stops. They were going to put them around whole numbers, right above the high. There's all kinds of formulas that we would think about. And when they got close, even if I was losing money, I'd rip the book out and make them charge them higher or lower, and then knowing they'd come right back to me.
Yeah.
I mean, that's what happens. It's not that we know. Nobody cares where your stop is at.
Yeah,
They
people care about my one lot real bad.
Concept.
But the one lot.
No, you're right. You're absolutely right. That is cool that you would rip it around, though. Like,
no, we would do. Look, we saw something getting close to a new high. We were going to rip right through it because that was what you did. Because that's where everybody's stop was. Everybody was short in this case. Their stop was right above the high because they can't take the high out.
What'd you do? Grab the liquidity and then come back with it?
It's all the market. We all got together and just ripped them right through.
That's hilarious.
I mean, listen, again, on a slow day, or like the 4 days after the 87 crash, it was like a morgue in there. It was so quiet. I mean, you could hear because everybody was afraid. But you saw something coming, you could rip right through it, and you would get options that were trading at $5. You could sell them at 5, 6, 7, and 8 in minutes, and then they'd come right back to you.
So keep it real. Was it a good thing that you weren't around for the 87 crash? You said it was a ghost town after. I assume it's because people blew out.
Right? Oh, I was there. A lot of people blew out. It was great that I was there. I loved every minute of it. I was on the wrong side to start with. I had a miscount, which in a normal day would have been nothing. I had clerks tracking my positions because you're trading hand signals across the floor, and somehow I had a miscount. I was short a 5 lot of puts into the crash.
Short a 5 lot of puts. That's no bueno.
Yeah. So, but it worked. It all worked out. The week was great. I mean, again, the business is what it is. Sometimes you get slapped. You get cracked in the head. It happens. Yeah. You guys don't get cracked because you got pretty good stops.
Yeah. Okay. Yeah. yeah.
Again, listen, I've let things run. I'm a dumbass. Sometimes I let them go. I keep saying, hey, sometimes I'll sell more or buy more.
Right. Lean into it.
Listen, one thing you get from me is I tell you exactly what I do. I'm never going to hide. If I took it up to shorts, I'm going to tell you I took it up. I got it rammed up my ass.
I get squeezed. Like my biggest losers usually are when I get squeezed. Because I like the short side, even though I've been trained to go long. I do like the short side.
Every trader likes the short side.
Yeah. Well, it's the stairs up, elevator down, right? You like the speed and the sort of the dopamine immediate reaction that you get. Right. Like it's faster. You get your money faster when it does happen. And it's also usually counter,
It's a lot more fun when they're going down.
Yeah.
Because they're just ripping them. Right. Yeah. You're not grinding tick for tick, right? You're just
longs are boring and they take a long time,
except when you kept to rip your face off rally, then those are good.
Dude, this is crazy. And then
traders are trained to sell.
Yeah.
I mean, just the natural of a market maker on the floor. You're always making a market.
I was always because I traded Delta neutral. I was always super heavy. Like I was negative Vega constantly. Like I turned into a Vega gamma trader. And when we got closer to expiration, I had to be really careful because I was constantly leaning too hard to the short side. I would always want to collect the premium. That's where I was there for. And my partner was always like, dude, you need to buy some wings and balance this out. I'm like,
you gotta buy some milk, brother.
Yeah, right. Exactly. I'm like, no, dude, we're good. And then one time I was actually in cattle and I was short and we came into the close and Dorman was my broker at the time. And they called me and they were like, listen, they're like, we don't like the fact that you're short going into the close. Like, what happens if you limit up tomorrow? And I'm like, don't worry, life's good. Thank God that didn't happen. But I remember thinking in my head, they're like, you know what? They're right. I've seen these markets go limit up for days.
I've watched, especially in those markets. Those were a little thinner than anything, right?
Yeah, for sure. Yeah.
That's why they took pork bellies off the board.
Yeah. Yeah, feeder cattle was my jam because it was so thin. It was $12.50 a tick. I loved it.
So what do you say? What do you got? What do you got for us in your closing comments here, big boy?
My closing comments. Oh man, Don't fight the funk. Honestly, I mean, I didn't see this coming. Your opinions don't mean a damn thing. And right now we're trading the chart, and this is buy the dip until proven otherwise. I mean, that is the best thing that I can say. I mean, today we didn't even have many trades today because we were waiting for a pullback and the support. It didn't happen. I feel like this is the hardest time for traders right here when we get in this all-time high price discovery mode. We never really pull back. We never really test anything. This can really make you do a lot of dumb shit. And I think this is really when the process and is the most important, to stick to the process and be patient. Patience is so hard. I have children. You think I would be super patient, but I'm not. Like this is really what I think.
Go play poker. Go take your dog for a walk.
I do truly think that times like these are what define professionals from amateurs. You know, when you get up here, and you can just.
I think that's important. And I think everybody's got to understand that there's the decision to not make a trade is the same as making a trade.
It's huge.
Yeah.
Okay.
Yeah. We're not here to fill our time. We're here to make money.
That's the honest truth. What do you got to say for the close, Rob?
No, I love the conversation. It's really been good. It's patience, process, and oftentimes I'll think of myself, if I had a manager over me, which not typical as an independent retail trader, but like, did I do my job today? Did I follow my process? Did I take the trades I was supposed to take? And that's usually, my scorecard isn't, did I make money or lose money today? It's, did I follow the process? And then every week I come into it with like, what's the one thing I'm going to work on this week? Like, is it execution excellence? Is it following process? It's
Trading cards. I mentioned to you last week. I forgot they're right in front of me. I still keep them.
So what's your words of wisdom, Bubba?
My words of wisdom is don't try to predict the market. Don't fight the tape. Okay. It's okay not to trade. Do I think we're going down? Yeah. Would I like to sell until my hands bleed iron? Yes, I would, but I'm not going to. Okay.
Right.
I think that the patience and the opportunity and the education that you're getting, even from this podcast, the education, the little nuggets we gave to everybody out there. And if you tune in every week and listen to us, we're going to be able to help teach you and help you get that self-control, because it's hard. Listen, I'm not going to tell you that I'm the guy that never fired up 1,000 lot. Okay. I mean, I've done it. Okay. And I've gotten it in my ass handed to me a couple of times. I mean, I'm never going to sit here and tell you that it's any different. This is work.
Yeah.
Remember this. This is a business. Okay. Whether you're doing it part-time, full-time, you are in a business. This business revolves around money. Okay. And life comes down to two things. One is money. The other is whatever you want it to be.
That's what's up.
Very true.
Well, gentlemen, I appreciate you being here. Thank you guys.
I love it. It's
Thank
great.
you.
I can't wait for next week. I already got a whole bunch of things for next week, but I don't want to run them out.
Well, we'll stop the stream and we'll figure out what time we want to do next week. And you guys, until next week, Rob, thank you so much for coming. Hopefully you come next week.
Rob, it's great to see you. I heard you say now I got to see you. What a pleasure.
Cheers, guys.